Japan's finance minister. This is the most dramatic moment to talk about Japan. Only yesterday, our Prime Minister Takaichi announced officially the dissolution of our lower house. She said she will stake on our new 3 major policies onto the choice of Japanese people. And I will speak about or explain about all these 3, starting with strong Japanese economy through responsible and proactive public finances. And now in Japan, optimism toward these changes is growing. In a recent survey of young adults, confidence in politics jumped from about 20% to over 56%, historically high figure, and almost 50% viewed Japan's future as bright. It's also quite new. We are different from your country. Citing political change and expectation for the new administration. And Japan's nominal GDP has surpassed $4 trillion. Capital investment is at record high, and wages have risen over 5% for 2 consecutive years, and the Nikkei average is now about 5 times its 2012 level. And these results show Japan is shifting from a deflationary cost-cutting economy to a dynamic growth-oriented one, driven by bold investment and productivity gains. Today, I'd like to outline the 3 key pillars of our growth strategy to turn this momentum into sustainable progress. And the first pillar is strategic investment in priority areas. In a country facing future population sharply decline, achieving a strong Japanese economy requires strategic fiscal action. And based on responsible and proactive public finances, by strengthening Japan's supply structure and raising growth, we aim to lift incomes, restore consumer confidence also, and create a virtuous cycle of improving corporate profitability. We are advancing bold and strategic investments that enhance growth and resilience against potential crises to strengthen Japan's supply capacity. More concretely, we will provide proactive public-private investment to address risks such as economic, food, energy, and resource security. Through delivering products, services, and infrastructure that helps solve the global challenges, we will drive Japan's further economic growth. For example, we are strengthening the semiconductor supply chain through initiatives such as the Lapidus project, which would enable domestic production of cutting-edge 2-nanometer chips. And we are also advancing physical AI, which would enable autonomous robotic assistance and unmanned plant operation by aggregating and training high-quality data. And we aim to achieve more than $330 billion of public and private sector investments in the AI and semiconductor sectors by improving predictability for the private sector through over $66 billion of public support. These key measures for building a strong Japanese economy are also reflected in the 2026 tax reform too. Specifically, we will introduce tax incentive measures for promoting domestic investment in high value-added assets. In addition, we will establish a new category under the R&D tax system, designed to incentivize corporate R&D in national strategic technology domains, such as AI and quantum and biotechnology.
Some bond investors seem to be a bit nervous. I was just talking to some Japanese finance people. They say that the bond yield in Tokyo is going up. What do you have to say to people who are worried, particularly in the bond market, about the implications for Japan's debt?
Yes. Since last October, since I assumed my post, I have been continuously talking with financial sector, pension, insurance, and all the institutional investors that we keep on going with sustainability of our public finances. And in the formulation of the last two economic package, we could have kept our dependency ratio upon GDP lower than the previous one. That is incredible, but that was feasible because tax revenue increased. And our dependency ratio upon debt is as low as 24%. It's 10% lower than it used to be. And our this year's public expense ratio onto our nominal GDP is by far the lowest among G7 countries.
So
that's the result. So we are trying to keep the sustainability.
So you
along
can,
with we are increasing spending.
Yeah, and you're confident that what growth will make up for will generate enough revenue to make all this possible?
Yes. We firmly believe in we should sharply move from the extensive cost-cut economy toward vital boosting investment economy, and it will bring about more tax revenue and more consumption, and that will have a virtuous cycle of economy.
Okay. Spon, do you think it's fair to say that Japan is still in some respects a slightly closed society and that you need to do more to open up, or is that a misunderstanding?
Yeah, Japanese economy is, I honestly think it's a relatively open one, but the hesitation of, for example, testing of pharmaceutical is not coming from that we are closed, but Japanese people have a tendency not to cooperate with that kind of testing. So we increased our R&D budget by a great deal last year, supplementary budget, and this year. That will try to put many research and development as many as possible into domestic field, but we let that field of your field as legal exemption because we are in short of that. But this is true that research and development is essential in many fields, and as pharmaceutical sector, let's say 10 or 20 years, they were aiming for a bigger business. But after all, most of our big pharmaceutical company finally had an alliance, capital alliance with big worldwide spreading companies. And now they often come to see me because last year was a battle year of medical and pharmaceutical budgets. And that is a tendency to be lowered by Trump administration. So they came to ask me to stop that lowering. We cannot bear anymore. That kind of difficulty is always rising in the sector.
Political environment and that run an economy when you have both the US and China putting different forms of pressure on you.
Mr. Lashman, it's a very good question and always posed to us. We are between United States and China for long years, and we can't move geopolitical. And we did have a war with both of that. Yeah. We know both of them very, very well. So finally, we had the only national security treaty with the United States. The United States is the only ally in this field. And even last week, I was in Washington, D.C., and my friend Scott Bassett was organizing a G7 critical mineral meeting. It was very successful. And on that sense, we are facing the restriction from the side of Chinese government without any good reason. But it also happened. It's always happening since 2010. These reasons now have nothing to do with trade or economy, just for another reason. But wherever it happens, United States and our ally in G7 are always of our helps. And Japan is the only country which have seat in G7, and it's been 50 years. We have the only country in Asia who have a complete free currency. So that's my answer. We, geopolitically, we are always trying to be in our best position. And now it's as it is.